So what's going on with India's hospitals?
The Indian hospital sector is booming.
Growing demand for healthcare.
Max Healthcare के capex plan.
Max Healthcare, Narayana Health, Rainbow Children's Medicare.
Fortis recovery stock है, steady stock है at Apollo Hospital.
Max Healthcare has a huge capex in line in.
आज मैंने इन्वेस्ट किए 30,000 रुपए 4 हॉस्पिटल स्टॉक्स में.
Top 10 hospital stocks जो fundamentally काफी ज़्यादा strong है. In the long term, hospital stocks have great potential.
So what's going on with India's hospitals?
What if I told you that the biggest investment opportunity of our generations in India isn't tech anymore or even manufacturing, but something far more fundamental, that is something that touches every single one every single day? And I'm talking about hospitals. Yes, you heard that right. India's hospital chains are not just growing, they are just exploding. And smart investors are already positioning themselves into this sector. But with so many players out there, how do you pick the winner? And today, we are ripping apart the financials, the strategies of India's healthcare giants, your Apollo hospitals, your Max Healthcare, your Narayana Health, your Rainbow Child Healthcare. And there's so much more for you to stay tuned and watch. And we will show you which ones are set to potentially deliver a multi-bagger return. This is not just about healthcare. This is about your financial health. So welcome to another episode of Finfluenced, where we talk about how we got finfluenced by the finfluencers, and today we are here to decode the markets, to help you make a smarter decision and help you do smarter analysis. I'm your host, and in this video we are diving deep into the sector that is often overlooked by so many, but it's quietly becoming one of India's most lucrative investment avenues. We'll uncover the markets, explosive growth, dissect each company's unique strategy, compare their performance head to head, and ultimately tell you if these stocks are investable. But for that, you'll need to stick around, because by the end of this, you'll have a very clear roadmap to potentially massive gains. So first, let's understand the landscape. India's healthcare market is not just booming, it's on a rocket ship. From a staggering of $280 billion in 2020, it is projected to hit a mind-blowing $638 billion by 2025. That's almost 2.3 times a jump in just 5 years. And the real question is, what is fueling this growth? Why is this growth so unprecedented? Right? So first of all, there is a silent epidemic going on. Now, no, I'm not talking about COVID. Yes, we saw hospital stocks going up during COVID, but COVID was not silent. It made a lot of noise. The silent epidemic is the rising lifestyle diseases like your diabetes, your cardiac heart health, obesity, and they are creating a never-ending demand for specialized healthcare. And this is where these players come into the picture. While on the other hand, more and more Indians are getting health insurance, which makes quality healthcare accessible for millions and millions of new people who are now more aware of insurance policies. Plus, the government also is releasing schemes like Ayushman Bharat, which are pushing for universal coverage. Even if the private hospitals have their own nuances, it is an opportunity regardless. Digitization and technology influence in this sector has also seen a rapid rise, with telemedicine, AI diagnostics, your digital health platforms, and also pharmacies onboarding onto quick commerce. Okay, quick farmers. That's a startup name for you. If you want to create a quick commerce for pharmacies, quick farmers is for you, right? All right. Well, all of that your tech is now making it more efficient for customers, patients sitting at home and consuming healthcare services. Also, diagnostics and medical treatment in India is a lot more cheaper than other developed countries. So there's now a new buzzword called medical tourism, where India is becoming the world's go-to destination for affordable and high-quality medical treatments, attracting patients from across the globe. Which is, I mean, who thought about that, right? And the government is also pushing schemes, your PLI schemes for medical devices, which will basically reduce the import dependency for this medical equipment, and it will boost local manufacturing, which could lead to massive cost savings for these hospitals in the long run. And you know what? These are private players. If they save the cost, they are not going to translate that to the patient. At least not all of it, right? Why? Because they would want to increase their margins. Of course, right? But however, it's not all sunshine. We still have problems. We still have to face infrastructure gaps. There's a high capital expense, there's out-of-pocket expense you need to do. But for well-capitalized players who have a lot of free cash flow, these challenges actually translate to massive opportunities to just fill the supply-demand gap. And this is where we discuss about the titans of this industry. We are talking about Apollo Hospitals, Max Healthcare, Narayana Health, Rainbow Children Medicare. And each one of them individually is a giant, but they play their game very, very differently. And let's talk about it. Let's talk about numbers. Apollo Hospitals is the undisputed king in this space. Not in terms of financials, but in terms of expansion and exposure, because they have over 10,000 beds in a very integrated empire that is not just about hospitals, but pharmacies and also digital health. 50% of their revenue only comes from the hospitals. The rest 50% may come from other services like pharmacies and digital healthcare services. But while Narayana Health, on the other hand, is the next largest, but still very far at 5,800 beds. But it's strategically there because they focus on economic and high volume specialized healthcare. So while one of the listed stocks out there is Narayana Health, it is part of the Narayana Health group, right? But let's talk about another giant here, which is Max Healthcare. Now, why do I say it as a giant where Narayana Health already has high number of beds? Because Max Healthcare, you'll know why it is a giant. Because today it has 5,000 beds, but it's not going to stay the same very soon. Max Healthcare currently has around 5,000 beds, and it is strategically concentrated only in high-value metro cities, mainly focused in Delhi NCR. While on the other hand, these three players are really generalized and integrated in their ways. We have Rainbow Children Medicare, which is a niche specialist that only leads in pediatric and women's healthcare with only 1,935 beds. Does that mean Rainbow is any smaller than Apollo or Max or Narayana? Let's see, because who is actually delivering, right? We look at a metric called ARPOB, that is average revenue per occupied bed. So while Max Healthcare leads this pack, while having half the number of beds as compared to Apollo, Max Healthcare has a stunning ARPOB of 75,900 rupees, which is basically indicating that they are delivering really, really premium service. While Apollo is strong, not far behind, at 63,569 rupees, average revenue per occupied bed. And Rainbow is also competitive at 58,100 ARPOB. Narayana Health stands last here at 46,301 rupees of average revenue per occupied bed. But in terms of occupancy rates, Max shines again. While Max has the highest ARPOB, it also has the highest occupancy rate at 75%. And that is, you are getting the most amount of revenue and you're also the most occupied. That's a win-win situation, right? So it's an excellent asset utilization by Max Healthcare. Again, Apollo is not lagging a lot behind. It's at 67%, Narayana at 60%. But Rainbow, it is a newer player, number one. Second of all, it is very, very specialized. It only specializes in pediatric and women's health. So it has a utilization or a occupancy at 46.5%. But the new units are rapidly coming up, so we'll see how they grow and how they evolve into another big giant. Now, while we discussed who is delivering, who is actually, or rather, where is the money going? So this is where we discuss about the EBITDA. Now, hospitals are judged based on a metric called EV by EBITDA. EV is enterprise value. So this is where things get interesting. Now, Rainbow Hospitals, despite their very small size, small number of beds, small ARPOB, and also small occupancy rates, they command the highest EBITDA. Their EBITDA margin is around 32.3%, and that is thanks to a specialized and asset-light model. While Max Healthcare is right behind at 27.3 EBITDA margin, it's mainly driven by efficiency in operations and also smart acquisitions, and we'll discuss about their acquisitions as well. And Narayana Health remains healthy at 25.0 EBITDA margin, which is very, very sweet. Apollo Hospital dips below the 25% mark at 24.2% EBITDA margin, but it's showcasing strength over its core hospital operations. You see, Apollo Hospitals has the highest amount of volume, number of beds exposure. It's not leading in any category. It's not highest ARPOB, not highest occupancy rate, not highest EBITDA margins as well. However, it is consistently, decently high in all of these. While it is lagging among all the other three competitors, that does not mean that 24.6% EBITDA margin is bad. It is a really, really good EBITDA margin for the company that size. So let's be mindful of that, right? And what about the return of capital employed, ROCE? Max Healthcare again leads. Crazy. Max Healthcare again leads at 24.6% ROCE, while Narayana Health at 20.6%, Rainbow at 18.2%, and Apollo again lagging behind at 17.1%. When I say again lagging behind, I will like to remind you that when we screen for good companies, a really good growth company has an ROCE of upwards of 15%. So while Apollo Hospital is lagging among all of these three, it is still at a 17% ROCE, which is very, very good, right? And these are strong numbers, and these indicate really efficient use of capital inside of the company, and really, says a lot about the management as well, right? All of them, regardless of the size, metrics, they are all racing for growth. Apollo is on an aggressive expansion spree. They are already leading with 10,000 beds. They are planning to add 4,300 beds more in the next 3 to 5 years. They're doing a capex of about 8,000 crores. Why? Because they just have the cash. So why not utilize it, right? And they are integrating with Kaimed to dominate the pharmacy distribution. So as I said, 50% of the revenue does not even come from hospitals. It comes from digital services, digital healthcare services and pharmacies, right? Max Healthcare is right there behind them. They are also planning to add 4,000 beds. But this is going to double their current capacity, and if their metrics of ARPOB, occupancy rates, and ROCE are maintained, and EV/EBITDA margin is maintained, then doubling their capacity is going to infuse a huge amount of cash flow into this company, which is going to make this just another rock star of a company. And mainly they are doing this via acquisitions, your brownfield expansions, your asset-light models, and that's their strategy. While Apollo Hospital is doing organic expansion, Max Healthcare is not doing organic expansion, but is one worse than the other? No. There are different strategies from different players, from different tech, from different titans. It just works. It is working for them. Similarly, another different strategy is Rainbow Hospitals, where they also plan to add about 780 beds by FY 27-28, which is again 2-3 years from now. They are still focusing on the specialized hub and spoke model that they have, which is entirely funded by internal accruals, which means they're not taking debt. They have a very, very good financial strength inside of the company. And Narayana Health is also adding around 700 beds in India, but their strategy is slightly different. They are significantly expanding internationally, while their Cayman Islands is, I think, going to be operational very, very soon, alongside their already established your integrated care business. They have clinics as well, they have insurance as well. Narayana Health is just doing something that no other hospital titan is doing, that is expanding internationally. As an investor, what does this mean to us? The Indian healthcare story is far from over. It's just getting started, and these companies, they're poised to benefit from these several powerful growth triggers, right? Now, the massive planned bed additions by Apollo and Max, which is like 4,500 beds in the next 2-3 years. Once they are fully operational, they will unlock significant revenue, and because of their EV/EBITDAs, because of their EBITDA margins, that is also going to unlock massive profit potential. While Max Healthcare, Max is they have successful integration of acquired assets. They've proven that acquisitions in hospital sectors work really well. They've done it well. They've set a prime example of how strategic mergers and acquisitions can actually fuel a rapid potential profitable growth, basically. While Apollo also has shown, not just Apollo, actually all of these players, they are investing heavily into digital assets, digital healthcare, which will improve the efficiency and expand the reach of all the hospitals. They will enhance the patient experience They will create new revenue streams. I mean, I as a patient do not need to physically visit the hospital. I just lay on my bed, click on the app, get a doctor's consultation. Doctor will give me prescription. Prescription gets uploaded to the pharmacy app. Pharmacy sends a quick commerce guy to my house with the medicines, and lo, I'm done. I don't need to visit the hospital unless it is extremely critical. Now, how does that help? It just reduces the physical load on the hospital infrastructure, which actually, if present patients can be catered, delivered, serviced faster. And the ones who can avail the services sitting at the comfort of their homes is also convenient for them. And all that revenue is just getting channeled back into the hospital itself and not getting outsourced to another company. Let's say like Practo, right? Well, we have seen different kind of strategies here. There's specialization, there's integration. Whether it's Rainbow's niche dominance or Apollo Hospitals' integrated ecosystem of pharmacies, digital health, or actual hospitals, each strategy is actually proving effective. It's proving effective because they are capturing market share. As simple as that, right? Now let's look at the valuations as well. Because while the sector is red hot, some of these stocks might appear to be trading at a premium valuation, admittedly. I mean, we've seen the growth prospects, right? We've seen big players already taking positions. Mutual funds are buying it. FIIs, DIs are buying it. It is crucial for us to do our own due diligence and also look at metrics like P ratios, price to sales, EV/EBITDA trends, and we need to determine if this actually aligns with our investment thesis, investment horizon. With that, I would like to say that this is not a buy or sell recommendation. I am not a financial advisor. Please don't take this as financial advice. It's also written somewhere down below. Make sure to do your own research. And I will send all my research as a document in the link in the description, which you can go and check, right, once you're through with this video. Let's move forward. So, of course, I mean, see, why we are talking about valuations? Because no investment comes without risks. Right? There can be regulatory changes, there can be intense competition. I mean, the PLI schemes that are there may not be there if the government changes. The competition, I mean, right now we are discussing about 4 players. What about another player coming to the market and stealing a significant market share because they just cracked another piece of the puzzle, right? The challenge of maintaining high quality because they're rapidly growing. Can they maintain the quality of the service across their expanding network? These are all things that we need to discuss, right? But the underlying demand for quality healthcare in India remains incredibly strong, and that gets serviced more as insurance becomes more common. So are India's hospital chains investable? Well, I don't know. I can't tell you, right? I'm not a financial advisor. But based on the facts that we've just now seen, based on their aggressive expansion, based on their strong operational metrics, based on the undeniable tailwinds that Indian healthcare sector is going to face or is already facing, the answer to many of these players, not just fixed to these 4, but more, is a resounding yes to actually consider these hospitals, these stocks, this sector. Discuss this with your qualified financial advisor and make sure that if you are satisfied and if you think that this thesis is working, hop on the hype train. They're not just building hospitals, they are building the future of healthcare in India and potentially your portfolio's next big winner. If you found this deep dive insightful, make sure to just smash that like button. I should not have done that. But please, click the like button. It helps us bring us more valuable content. It helps us know what you like, what you don't like, right? And if you haven't already, please subscribe to Finfluenced. I know 90% of you are just not subscribed. And please don't be lazy. If you think that it's worth, please hit the like button. Please subscribe to the channel. Hit the notification bell icon so you don't miss our next market breaking analysis. Also, let me know your thoughts in the comments because I may have missed something. I may have discussed something that is incorrect, right? I'm just a human. I'm just another 20-year-old making financial analysis on the internet, right? So let me know. And thanks for watching, and we'll see you in the next one.